let's see. This is I keep this 5-minute chart up. It's got a couple indicators on it, and this is good for the SPY. I keep one up for the SPY and the S&P while watching during the day, no matter what I'm trading. So edit this, and that is 1410 implied volatility. Edit chart, and that is 1-4. Oh, 1-4. 1-4-1-0. Let me get this other thing for you guys. So if I go here, let me go here and get this real quick. Here, that's what is that? That's C documents. C documents right here. Here, sheets directory reports, daily 731. 731. And yep. 731. Oh, come on. Damn it, let me close that because I can't do that. Here. Now I go back and get that. Hey, when I do that, here, see documents. There, reports, daily, 731. Let's see if that goes in there. There you go. There's today's sheet stuffing. If you open it up, I dropped it in the box there. It's just today's sheets. Now, what do I have here? I was back to editing this chart. Edit this. I'm going to get rid of X that. And this is, yeah, okay. And we'll look at that and then we'll talk about them in a little bit. Let's see, 731.5. That's that, 731.5. So that's good. 742, okay. Just checking my standard deviation levels. We just hit the settlement price. So that's that. Now, now I can edit this other chart, edit this. Let's see. 1440. So Delphine, I don't know who else is in the room. But this is I go through this process every day. All my sheets are color coded for my time fractals and some other things, my standard deviation levels, and I update these, daily, and they give good support resistance. And they all mean different things. Let's see. So this was yesterday. So yesterday was a big up day. And that's a 24-hour candle. So that is X that. And I'm going to X this. X that. Oh, come on. X that. Now, X that. X that. And now yesterday. So this is yesterday's 24-hour candle, and I draw the midpoint of the candle. Morning, Terry. Terry, there's my sheets are in there in the thing. If you see them, download them if you want. Anyway, let's see. Let's do this. Edit this. So get rid of that. Get rid of that. Get rid of that. Those. And one more to get rid of. Get rid of that. Okay. The significance of this line, this is a 1440-minute candle. That's a 24-hour candle. Starts and ends at midnight Eastern Time, New York. I draw the midpoint of the body of the candle. Like this was a big up day yesterday. It wiped out a lot of damage to the market. But we need to close. This will add support during the day, but it needs to close above there. Closes below there, we're probably headed lower again. But a lot of times the market will come back and test that level. So that's why I put that. And then I have my 480 overnight fractals that I look at. I have time fractal theory and price behavior on a time fractal theory. Let's see. So here yesterday we took this out. So that's out. And you can see yesterday morning, the yesterday's overnight was this time fractal. So we actually traded it, we traded above it and just never stopped. Here's last night's time fractal. It went up, made kind of what am I just thinking? Hanging man, or it's not what I would consider a real bullish kind of candle right now. And this is going to be a real tight situation here. So get rid of the ratio, get rid of these, get rid of that ratio. I'll make this gold. This is one of my gold levels. Get rid of that. And actually, I'm going to make this gold. Make this gold. Because these two candles are so close together, I'm actually going to only use one because it's meaningless. Trading above there would be bullish, and it would mean that we could work our way higher. Trading below it is bearish, and it's already filled the gap. That's why when I came in this morning, I got short right away because it was a small gap and it looked like it was going to fill. So that's what we're looking at there. Now I can put this on a 60-minute. Yeah, I think we could easily go down here to this 436 and test this today. So let me just save this page. Let me move this up a little bit. Capture image. Right there. Capture image. And this is ES space 7 minus 31 minus 2026, and it is 840, 840. There. Close that. I'm going to Close this. Save all pages. Save all pages first. I'm going to update this chart here. Update. Yep. That. And that is 2417, 2417, 2417, enter 2417, 2417. Let me check this. 2417. That's 2868309286830. Yes. Okay. Save pages again. Here. Save all pages. Save all pages, and I gotta see this. Let me just check this real quick. 166, 166, 180, 170. So that's 270. Okay. Okay. And then let's go to the NASDAQ. We'll get these straightened out. And we'll talk about all this stuff in a little bit. NASDAQ, and that is standard deviation now is 2417, 2417, 2417, enter, 2417, enter. This is going down to fill this gap right now. And we'll look at some of these gap stats in a little bit too. So that's that. Let's go here and do this. Go here. 2417 on this chart. It's 2417. Enter. 2417. So that's that. And now we'll go to the 1440. 1440. So yesterday took out this, X that, and it took out this, X that, come on. X that, and it took out this. X that, and now we will draw yesterday's on here. Right there. Damn it. Let's X that. Draw this again. Hate when I do that. There. Get rid of that. Rid of that. Well, there you go. Okay, now we'll go to the 480 and get this 480 and 480. 310. You gotta watch this. 480. So that's coming out. That's coming out. And there was the early morning 480 yesterday that ends at 8 o'clock. And because it was an up and it was off the bottom, I mean, we never went back down and touched it. Now today, this 480 was also up, but we're in the NAS, but we're taking it out. So that is, and I think that this is probably likely headed towards settlement. I'll get the gap stats up in a minute. Let's see. Let's see this. X that. Edit this. Edit. This gold. For that. This gold. Okay, trading below 20, 28, 458, 25, an hourly close below there, especially if it doesn't fill the gap already pretty soon. It's highly likely that this gap is going to fill anyway. We're trading below there. And in the NAS, this gap is, and by the way, these are 415 settlement prices that I use. I don't use the same settlement prices that everybody else is using. So 28, 324.75. It's a little 115 points down to that gap. This will likely fill today. Right now, it's likely going to fill. So let's get here to the 60, and let me capture this 60, 60. And then I'll capture this, and we will get this other stuff up. We have plenty of time. We have a lot of time this morning. There, capture image, and Q space, and Q, that finger. Space 7 minus 3, 1 minus 2, 2, 6, and it is, what is it? It's 848, 8 space, CT enter, 848, T enter, close this like this, and save page. Come on. Save all pages. There we go. Save all pages. I'm right here. Let's just see if we can get these gap stats going. Local morning gap. Where is that? X that. X that. Come on. Here we get this. C. Documents. Daily workbooks. Basic gap. There it is. So we'll clear this data. And we will import this. Import. And that is ES. I already downloaded the data for this earlier this morning. It's ES. Come on. There you go there. Let's see. The 4 o'clock close was up. 4 o'clock close was 40, 74, 72, 75, 74, 72, 75. 74, 72.75, enter. And then we're just going to do this for this. Copy. Save. And then we'll look at the NAS. Same story. Clear. Import. Yeah, that's right there, 731, open. Come on. Load. And then go 415 close. And it was 27,813.25, 27,813, not 27, 28, 229 even, 28,229 even, enter. There. Now copy. Come on. Here's that. Copy. There. Paste. Normally I do something a little different for this, but I didn't run these yesterday. Let's see, that's that now. Let me go here and get this rich personal compliance documents. And actually, vid, gap stats. Let me look here. Here, search. Search this. Search cloud. Stats. Right here. Come on, open up. There we go. Update. There we go. I'll put this. This is if you see this. This is the. These are my basic gap stats. 89% probability that the ES will fill to the prior 415 settlement price. 54% that the NASDAQ will fill to that settlement price right now. That's all it's saying. So I'll put this over here and I'll put this in a window so you can watch it while it's to the opening. Up here. And I hope I didn't screw that up. That's that. And now 415 close. 28. 324. Okay. Yeah, now let's go here and get this. Share this. And we're going to do morning basic morning gap stats. And start screen share, and this one we'll do window, and that is this window right here. Oh, come on. Window, share. Okay, do you guys see my basic gap stats there? You should. See there. Anybody, Terry, Delphine, you see my basic gap stats, that other little window that I have open? Okay, thank you. That just means that in the ES, that which is only right now, you can see in the yellow on that box, it's 225 away from the this pre-opening change 2.25. That's a very high probability always that it's going to fail. Nasdaq's 157 away. You can see that it's showing. It should be showing. Well, let me bring this down here if I can. So this is the change from settlement in the Nasdaq 244.75, but I'm showing a 159 change because my settlement price is way different than the 4 o'clock settlement price. I use a 415 settlement price. There's a reason I do. So I'm showing like 155 points for the gap. This would be actually 244 points if you're looking at the 4 o'clock close. So, but I'm still showing that it's unlikely to fill right now. But because, let me put this back up here. Let's look at the NAS. And we're going to look at Ichimoku in a little bit. But I'm saying that if the NAS starts trading below this 28, 458.25, it will likely go down and fill, especially if it gets an hourly close below here. So at even at 9 o'clock, if it closes down below there at 9 o'clock, which is coming in a couple of minutes, where is it? It's currently trading 28,464. It'd have to break $6, but if it closes below there, it's probably going to go fill that gap regardless of what the stats are. So let's see. We have 1 minute to see if this breaks down a little bit. Here's why, Delphine. When the S&P futures contract first started trading in 1982, and by the way, that's the year I started on the trading floor, the market closed 15 minutes after the futures used to open when the cash opened. When New York opened, they opened. And for 15 minutes when the cash closed at 3 o'clock Chicago time, 4 o'clock New York time, the future stayed open until 4:15. So it gave all the institutions 15 minutes of extra time to do, and that's when only institutions were really trading that stuff, after the close. Gave them 15 minutes to execute trades in the pit, because the pit traded till 4:15. At the time, we didn't have electronic. So the institutions have been using that time from 4 to 4:15. Now, granted, they use more time now, but they use that 4 to 4:15 since 1982. I mean, they've used it for 44 years now. And a lot of them still use it, and they use that 15 minutes because there's plenty of liquidity, and they even up their positions. So I say all the news, and we get a lot of earnings at 4 o'clock. Like yesterday, all those earnings, that's why the market moved. All those earnings, all that news is in the market by 4:15. So that's why I use that 4:15 settlement price, because whatever news, whatever the institutions have done, it's in the market. So it's not like so at 4 o'clock, okay. For all U.S. indices, I use 4:15 settlement price. Yes. And that is why. And remember, those guys are like, basically they're 9 to 5 guys. So they use that 15 minutes to get out and they're gone. That's it. So if they have to, adjust their positions or settle their positions up, that's when they do it. So, so that news is in the market, and that's why I use 415 settlement price. Okay, and it makes a difference. Look at if you look at the sheets. Let's see, we can look at that 1 second. Let's get here and grab the sheets. We're gonna put. I get this so. Stock indices. Yeah, it makes a big difference. It makes a big difference. Here's my sheets. These are my stock equity sheets, and these are all the ETFs I follow. So if you trade any ETFs, these numbers are all good for the ETFs. The QQ. Oh damn! I hate when I do that. I have this set up with the watermark. Anyway, so and we're gonna look at this. This sheet's very important. We're gonna look at this sheet in a little bit, and then forget about that sheet. Here's the ES. And these are the standard deviation levels. So remember, 68.5% of the time you're within one standard deviation above or below the settlement price. So that is why that settlement price also makes a difference, because when you're measuring, you measure from there. You don't measure from the 4 o'clock price. The cash, the SPX does measure from the 4 o'clock price because that's when they quit trading. So these cash market prices, SPX, NDX, measure from the 4 o'clock price, but everything else measures from the 415 price. Now, let's just scroll down here and look at this page 13. This is right here. So here's yesterday's open, high, low, close, cash close. God damn it. 13, and the cash close was 72.75. And remember, the earnings came out good, so they rallied up to 86. NASDAQ, that's a 100-point difference right there. So that's a big difference. So you're measuring from that level. And that's why it makes a difference. Because that news is in the market, and that's a substantial amount of news. So that is why I do that. Here's the pivot system, and then here's just SD levels, just implied volatility, and it's in all the other sheets. I'm using 14.1%. So one standard deviation is 55.25. So if you had 55.25 to 486.75. You get 42 on the upside. If you subtract it, you get 31. So double that, subtract it, you get 76. Down here, and the NQ, one standard deviation move, a daily one standard deviation move is 358.34. Let's see. What is the percent? I'm not sure. This is the implied volatility level. I use the options pricing model to figure these levels out, and you input implied volatility, and options are priced using the Black-Scholes model. I know it's not perfect, but basically it's some iteration of that is what everybody uses. And when you have implied volatility, it tells you what you can expect the market, how far you can expect the market to move from the prior day settlement. In a standard distribution, that's 68.5% of the time is one standard deviation, 95.5% of the time is 2, and 99.9 is 3 standard deviations. So you can expect now. The other thing is that the futures markets and have more larger moves than the model would suggest. and there's a reason why it is that way, but I'm not going to get into that. Um, by the way, I've been trading options for like studying and trading options for 40 years. So I've forgotten more than a lot of people would ever remember. But anyway, um, the reason that these standard deviation levels are so important, though, is because all these big groups, big institutions that trade options, that have hundreds of traders trading options, they have a giant position, and they have risk managers that manage the overall position. So they just tell their traders, you trade this option, you just make markets, do whatever you got to do, and then it goes into a giant basket. And when the market makes a one standard deviation move, 68.5% of the time, they have to adjust the position. If they're long premium, they have to take a gamma scalp. If they're short premium, they have to take a negative gamma scalp. More Manny. Oh, by the way, I guess I could turn this on. I'll turn on my sound. I don't know if Manny's got the sound on or if you can hear me. Anyway, so they adjust their positions at those standard deviation levels, and you will see if you were to follow my SD levels, they're very good. It doesn't hit every day, but you definitely see the market at least hesitate or stop, or sometimes 10:30. Yeah. Okay. Yeah. Trust me, Manny, I know how hard it is to get into the doctor to see him. I actually have an elbow problem that I tried to get in to see. I think I have it's this, I don't know if it's, I don't play tennis, but it's like tennis elbow. It's like I have some kind of pain. I've been icing it, and it's helping. Anyway, so that's why these standard deviation levels are really important. And the rest of the sheet, you can see I just keep track of these cash levels: 52-week high, 52-week low, 2026 low. Just a quick reference point. Here's the closes of these indices over the years, so you can kind of scan and see what's going on. Anyway, so and then if you go back up here, here's the support resistance levels. I just put them in the sheets. Here's the ES. There's the settlement. There's the cash close. Here's one standard deviation up. Here's 0.5% up. Then I have this. I mean, that's what these sheets are. Anyway, I'm going to close this down, and we are going to look right here. So NQ is see how it dipped down below here last hour, this 480 overnight, and it held. It's back up in here. Well, if it closes below there, it's more than likely going to go down and test that settlement. Let's see, 245. Let's go look at the ES real quick. Yes, same thing. Remember, it's got a really small gap, so it already filled it. I'm still thinking in terms of the NAS is going to go down and fill that gap. I really think it's going to. I have other reasons for thinking that, but these are the levels on my chart. There's these gold levels, the standard deviation levels, and then this is the 1440 level from yesterday. A lot of times the market will go back and test those levels. That's in the ES. That's 43 or 74.3612. Let's see here. So here, look at the NASDAQ again. See what that's doing. NASDAQ's right there. Okay. Let's look at Ichimoku real quick. Ichimoku ES. It's got to get back above this. I call this the BGL. It's a 21 period simple moving average. It really works well in the ES. You know, if you start trading above it, it tends to stay above it. If you start trading below it, it tends to, also trade below it. A lot of times it goes up here and does what it's doing now. It hits it and then it backs off. Let's look at the NASDAQ real quick and Q. Let's see where that is. Yeah, NASDAQ just kind of went through it. And we'll see if that's gonna back off again. If this backs off in here, I would think, here, I'm just seeing something here. If this backs off in here again, that's why I don't have my speaker turned off. If this backs off again here in the NASDAQ, I'd be looking for it to go down here. I mean, if it takes out this low right in here, it's probably going to go down here. See the ES. Let's see what that's doing. ES. It's kind of a similar setup. Well, it's not so similar. Let me get something here real quick. I'm going to do this. Let's see. I do this. Maybe do this real quick. Create duplicate order. Shit, I just missed that. Let's do this pre-market session. 35. 5 here. CBV right there. Preview. Place. There you go. Oh, 9. Hate when I don't get a complete fill. There you go. Got that. Now, anyway, so I'm thinking that this ES looks like it should go down here and test this again. Yesterday was a big up day, so it wouldn't surprise me to see this trade down. And if it does, let's see. Let's fix that. X that, remove that, X that, because that's not where I wanted this from. X here. If it trades down 52, and let's see where this, see what this was yesterday. 52. Yeah, that would still be above the midpoint of yesterday's bar. So we'll see. Let's close this. 95. Wow, that dipped down. I gotta see this. That dipped down to 94.40. Wow, Intel dipped down to 94.40. I was looking at that. Anyway, 9:15. Plenty of time. Let's go back and look at this Ichimoku stuff real quick. Go back and look at the. Let's look at my time fractals. I look at the 60-minute. That's a chart I love to really watch because that is the time frame that I really judge everything from. And we had this big down bar here. it's trading on the Ichimoku. It's trading below the Tenkan. That's the red. That's the 9 period. And the thing I like about the Ichimoku is basically it's a bunch of averages. It's like a moving average system, but they use that. You measure it from the high. It's the midpoint from the high to the low. So it's like the 50% retracement. All of these are 50% retracements of these different time periods. Like here's the 26 period. That's the Kaijun right here. It's coming up. But this 26 period, look back, midpoint. That's the midpoint of the 26 hours back, right there. So that's probably. Well, let's see. It's right here, right now, and this is the Chiku span. So that's displaced price 26 periods back. So wherever this is, that's 26 periods back. So that's what this is measuring from. So you can actually where this line is going to go, because each period, if this is an uptrend, it's going to move halfway up, whatever that distance is. And since this is it ends right here, it takes the highest high and the lowest low. It's the 50% level of this. So it's from this high right now to this low, and that's the 50%. Same story in the 9 period, except the look back is like 9 periods back. So that's the midpoint of basically this low right here and this high. So if this continues to go down, this will go down. And same story. If it gets across, it changes things up. Anyway, let's go here, and I want to look at these other things. I want to look at the 480, because that's like a big. You can see that the ES, we really in a range right here. We've been in a range since May. From a low down here to a high up here, we're basically right in the center of it. We're below the cloud. This gets real choppy when it gets flat like this. You can see we've had a big run up, but it's going to run into some overhead resistance. And remember, I said that 74.53 looked like a target down there. Well, on this chart, the Kaijun is coming in at 74.43.75, so that's lower, and that should hold it. But the Tenkan is coming in at 74.20, because we got a bear cross up here, and once right here we got a bear cross, and once that bear cross, this all trended down, and now we're up here. It's the end of the month. It's going to be an interesting day. So I'm still thinking a little bitty pullback here. Let's look at the 1440 though and see what the bigger picture is looking like. Bigger picture, the same story, trading in a price range. We got a big up candle here on this 24-hour period yesterday, and now we're trading up here. Is it going to blast off up here, or is it going to pull back a little bit? And the top of the cloud right here is it's 74.63.12. Easily go down and test that top of that cloud. And the Kaijun here is 74.78. So it could easily test either one of those. Let's see the NAS and see what the NAS is doing. 920. This is 1440. NAS is the same story. It's kind of looking a little tough right here. Go here and do this. Create duplicate. Order. I'm going to do this right here. Pre-market. And do. Okay. Here, go to that. Okay. We have several minutes before the open. There we go, got that. Now, so let's look at the bonds and the notes. I haven't looked at those in a little while. Here's the bonds, and let's see what's going on here. Not that there's much correlation right now. Ooh, bonds back down in the lows. That's not good. Let's look at the notes. CN VN space term F enter. Same story, kind of down there on the lows. Not really good. Let's go here and go back to the ES. Let's see what's going on here. Breaking out above the BGL, that's always a good thing. Let's see. Oh, I got this screwed up here. Hold on. Edit chart. Edit chart. Oh, yeah. There you go there. I don't know how that happened, but it did. Close this. Okay, so let's see. Almost this. Go here, do this one more time. Create duplicate. Where did this right here? Pre-market, CBOE, good till, preview. Preview, what are we doing here? 60, place, 70. Okay. Okay, I'm ready for this to start. Let me see if I want to check my room here and say good morning. Morning, Ian. You hear me? I'm in the pit room today, showing everything to everybody. I hope you caught up with everything that we're doing. We are soon going to see what happens here. I'm looking at this right now. This is the same story. This after the opening, this gap will probably fill, but we'll see. And we have 5 minutes. So, yeah, I don't really have much more to say. We've kind of gone over everything. We'll look at the sheets and we'll see how the morning progresses. Let's see. So close. I gotta put some orders in real quick. So close. Okay, 4 minutes. 4 minutes. Thank you, Ian. We'll be doing some other stuff here in a little bit. Oh, by the way, I did a study. Let's see if I can grab that real quick. I do daily studies. This is one that said the last day of the month here was likely I think I had likely a mixed kind of day. Let me see if I can find this. Well, actually, I'm gonna have to watch the opening here. I have a position on, and I'm gonna probably want to try to cover some of it if it goes my way, which I think it's going to. Remember, I'm looking for the ES. The ES should go down and fill this gap. Right now, if you look at that window, it's 86% probability of filling the gap. It's very close to it, and the gap is 86.75, so we're trading 94. That's like 8 points or something like that. I know it already kind of went over that area once before, but I think that it will do it again. Okay. You have to excuse my bad head this morning. Let's see. Here we go. Nope, it's 28. Got a couple more minutes. Couple more minutes. Oh, I also want to get this other thing going. Let's do this. Gotta go here until right here. Oh, come on. Right there. Close. Right there. Okay. We'll look at those in a little bit, Delphine. We can look at them after. I think it was a mixed bag today. Nothing clear cut for today. Let's see. That is, here we go. 49. Fuck, I wish that. Let me go here and do this. What's that? 97. Wow. Fuck. What is that? Wow, they hammered that on the opening there. Let's see what I got going here. I'll just leave that there. Leave that there, and I'll go get this. So let me close this. Close this. And go here. Oh, there you go. Close this, and then, what is that? 96, 97. here, go here. Like, damn it. I had a chance to take a big profit on that and I didn't do it. It's always a bite in the ass. Let's see. See what we got going here. It seems kind of frozen. Just doesn't seem like it's moving. Doesn't seem like it's moving at all. Oh, there's that. Is this moving? Yeah, I'm frozen. I'm definitely frozen. Let me just turn this off and well, other stuff's running. There we go. I'm gonna reopen this. Save this and reopen this. Son of a bitch. I hate when that happens. Now let's go here and do this. Reopen. Oh, I guess I'm gonna have to go here and Control Alt Delete. I have my task manager and turn that off. Yes. Processes. ES. E-signal. I think it's off now. Now let's go right here. There we go. Oh, come on. I hate being blind like this. Blind. There we go. Now, Edit this. Edit. Nice. There you go. Okay, now we'll see what happens here. So we have this. Let's see, get this going here, here, here. And that was this opening right there. And I have a 25-minute opening range that I look at. So here's the NAS open. Let's take out the low. Let's see, what was that low down here? This low was, that low was 79.5. So that's 20 points. 595, 250. Okay. Let's go here and take a look at this chart. Let's see this chart. New chart. What was that? Oh, it doesn't have it on there. Close that. Close that. Is that 158? So here comes the gap fill in the SPU. And the ES or the NASDAQ has a lower probability of gap fill. Let's see, I gotta do this now. We still got a ways to go here. Let's see. Whenever it trades below the BGL, that's always a negative. So the NAS. Let's look and see if this NAS can go fill the gap. Let's see. No. Let's see again. Okay. Yeah, it was kind of frustrating being frozen at the beginning there, Terry. A little frustrating. as I said, I have a target down here of like 2.5 or something. I mean, 3, what was it? 4.5 or something. I'm from that other page. Let's see. From my Ichimoku page. Let's see what we got going here. Okay. This is 370. I'm going to change that to place 4 points of now. Preview, replace, close, 370. 374. There, I got those. The 470 and create duplicate. Preview, place. Wow. Let me change this. Replace 1.0. Up 100. Preview. Replace. Close. Close. Replace. 1.0. Preview. Replace. Close. NASDAQ's giving it up. This is I guess let's see, 310. I just have a lot on. I gotta watch this. So 370, maybe I should do that. Create duplicate, what is that? $470. Create duplicate. Oh, come on. I don't want to give this stuff up too early, but just won't go. This is going to go down and fill that gap. There you go. Damn. There you go. Like 394. 4. Come on. Place. Oh, damn it. Place. Duplicate. We have this. Very good. 200. Create. Duplicate. 5. Let's do this. 1, 370. Fuck me. 370. Come on. 420. 470. Oh, going the wrong way. Shit. 50, 350, 350, 360. Preview. Place. There you go. I'll sell these. Here. Place. 4 even. Preview. Replace. There. Now place this. Replace. There you go. Preview. Replace. That should take those out. And now it's gone. Now sell this. Close position. Close 100. To the preview. Place. There you go. That should be that. Come on. Did I get this? I got them. I got those. And now I'm going to close this position. Replace. Oh, fuck me. I just have to take the pipe on this. I'm not going to like this. Oh, maybe I'll wait for that. Let's go here. 1369. 1369. Let's see what I got going here. I'm almost out of my position. Sorry. I had some long SPX puts on that I had to cover, and I had a lot of them on. So, and I still have some Intel puts on that I'm debating about what to do because I'm losing money on those. I bought those the other day, and yeah, that's going to be the pipe. Mm-hmm. This is 87. Let me do this right here. 87. This looks like this is going to do it. 87. Here, INTC. See, these 90s are 44. Yeah, they traded what they traded. They traded 10. Shit. I just had too much on. I couldn't buy anymore else, any other puts. Let's see. It is looking like it's going to go. That's a 90. What is it? Buy to open. One low. And this at 40. 40. I missed it. Not gonna chase. Not gonna chase. Can't chase the stuff. Let's see. Oh, we have the opening range established. I'll draw that in 1 second. Let me just check this out. Still looking at this. I think we get up here and maybe turn around again. 30. 30. Preview. Damn. 30. Should have bought those. Preview. Let's place. There you go. Come on. Not gonna get them. Damn. Hate that. Just missed those. It can still happen. There you go. Come on. Uptick. You got them. Probably don't want them now, but I got them. Let's see. Here. And let me find these real quick. And then we'll look at the open range. We'll look at the day. Create duplicate. And create duplicate. That is preview. Place. Oh, there you go. And I don't know what I got those at. We got something screwy going on here. This is preview. Oh, we probably had a number. Preview. Preview. Edit. Nope. Missed that. So I missed that, but I got those. Let's see what I have. Okay. So let's get back and look at my open range here. And I have to watch this position a little bit. But my open range is, I usually colored this in. So that goes from here. And that is what bars, that's the 50. So there, we're trading out the bottom of the open range. And we'll look at this in 1 second on the sheets. And so far, the first 5 minutes was the high of the day. The first half hour and the open range is trading lower. That's usually a probability that the day is going to end up lower, and we're going to expand to the downside, especially when the first 5 minutes makes the high or the low of the day, which happens about almost 30% of the time. Let's go here and do the NAS. Here. NAS, and we'll do this. So the NAS, the second 5 minutes was the high of the day. But let's see, and this is right, which that's 950. So breaking out the bottom, get rid of that. And then we'll look at the sheets and we'll see what this means. So when you look at the sheets, let's go grab these. Where did I put them? Up. Right here. When you look at the sheets and you look at this second page, yesterday's opening range, that's the 930 to 955, says right there, was 3750. The 5-day average has been 2990. The minimum has been 2225. The max is 3750. That was yesterday. Here's the 10-day average, 29, 30-day average, 30. So it's right around $30. That's what this opening range has been averaging. And then the first hour has been averaging, here's 43, 45, 49. You know, so it's been averaging, you know, like 16 to 20 points higher than the first opening range. That's the first hour. And then the day has been averaging 96 here. It's gone up a lot because we had that big day this week, but you can see it's definitely over 70. Oh, damn, over 70. Over 70. So we should expect range expansion right here, 15 to 16 points at least, as long as the opening range is kind of in those parameters, which was what I said, that was 29 points or whatever it is. So this is 515 to 66. So that's 24. This is actually a bigger open range than normal, but we can still expect, when it breaks out, we expect some range expansion to the downside. And that was running, 60 points. So 15, that would be about 55 right in here. So this is where we would expect it to go to. And remember, I had that Ichimoku modified fib level down in here too. So that's what I'm looking at there. This still looks like it wants to expand to the downside because we're under the BGL. This is a sharp drop off over here in the NAS. It's really getting hammered here. So I'm thinking we may be going lower still. Let's see if I can do something else here. But and if we do the whole day thing, I mean, obviously that'd be a big expansion to the downside. And remember, I said a lot of times it goes back and tests the midpoint of this 1440. That'd be 36. And you know, I was targeting on this Ichimoku right here. Let's go back to ES. And I want to go to this 5 minute because that's what I put that on, 5 minute. Remember, I said that if it breaks down, I targeted this 74.53 because they had all those numbers there, and look where it went. I mean, now could it go lower? Yeah, it could. And I'm actually beginning to believe that that's what's going to happen, but we'll see. Anyway, that was my target there. Let's go back here. A lot of reasons for it to go down here. That was an easy target. That's why I got short, and I was short from the opening, and but then I covered because I was just used the SPX puts, and I had too many of mine. I tend to do that. I probably got too many of these other puts on, but that's just the way it goes. Let's see. So if this goes down a little bit more, if this goes back down, I'll cover these and just call it a day if I can get there. Actually, let's see if this went down. This broke. We're at 92. If it goes to 90, I'll definitely cover those. So I'm looking for Intel to get hammered for a couple of points here. I actually sold the rest of my Intel this morning. I'm in buyback. I'm keeping it for a position, but I sold it pre-opening and on the highs. So Even the broken clock was right twice a day, so I feel lucky today. I'm gonna feel real lucky if these puts work out on Intel. Let's see. So I had a bunch of puts on that I tried to sell yesterday at the close. I missed getting my twitched on. Just couldn't do everything I wanted to do. Anyway, we are breaking down here. And this is really not looking good. I'll be a heartbreak when I see where these other puts went to, but I don't care. SPX. What were those? Those were the wow. Fuck. I was selling this stuff for what was this? What was those strikes? 375. Shit. I was selling this shit for $4. It's at $10 now. Would have made a lot of money. Huh? Oh well. It is what it is. Can't complain. I made good money anyway. I just took too much risk. At 4 and 450, I could have doubled it. Shit. Here. This wide open. Place. Down here, where is it? Intel. Create duplicate. Over here. Preview. Edit this. Edit. Preview. Place. There you go. Time is it? It's 10:22. There, fuck. Place. There you go. Okay, now I'll see what happens here. Let's see where I got those. 38. So do this. Do this. Create opposite. Create opposite. Opposite. Wow, I still can't believe I gave that other stuff away like I did, but I had too much on. So I still had a great day, but could be a lot of money. I'm long some Intel puts. I'm long the 90 puts. I'm just looking for a little more breakdown. I think it's I have this 91-ish kind of area that I think it could go to. And if that happens, these puts could, some of them, the puts that I put on will double. Paid 30 cents for them. I bought some more at 40 and 45. They're trading 45 right now. But we'll see if they can go down. So this is 10:14, almost through the first hour. You see, remember I said that this is the midpoint of that 1440, the bar yesterday, and that it goes down and tests that. If we start trading below that and close below that today, it'll be bearish. This is thicker because it was an old 1440 from a long time ago, but and you can see that the other day when we had that big break after the Fed meeting, it kind of went down there, but then it closed like right above it, right kind of on it. And I'm looking at this now. Let's see what we got going here. It looks like it's going to give it up a little bit. And all I want is Intel just to take out that low a little bit, the 92 low, whatever that low is, 90. Here, let's show you this chart. I'm looking at it to take out this low here. That low is 91.94, 91.94. We'll see if we can take it out. If everything else is moving lower, I think it will. And I mean, it could break down quite a bit more. 91.94. Wow. I don't need to tell you how much well, I left a lot on the table the other day. I left a lot on the table this morning, but I went size-wise and took it off. Oh, come on. Smack this down just a little bit. I need Intel to take out that 92, 91, 93 or whatever, the 92 area. So at 10 o'clock or 10:30, we'll have the first hour in, and I like the hourly bars. And then the 11 o'clock bar is a really important bar.
Danny
Hold on one second. Danny's calling. 1 second here. Hey, Danny, hold on. Let me mute the room. Turn this on. Oh, I have my speaker on. So let's see what Danny's doing. Oh, damn. It's not doing what I thought it was going to do. Let's see. I'm going to do this, though. I thought Danny wanted to do this. Wanted to do something live. Let's see what we got going here. This, X this, X that, X that. Oh, come on. X that. Here. Find open. Here. Come on. Hit this. One. Oh, damn. I think this is going to give it up again. Damn. I didn't get it in time. 38. 35. 32. 33. 31. Kind of lost Danny there. I thought he wanted to do something, but damn, I missed that. $31. Damn. Hate doing this down here. Damn it. Hmm. Well, I didn't get to add to that. I don't even know what I have on there. 5. Cancel that. Okay. Well, all I'm waiting for is a little more break in Intel. Still love that stock. I think longer term, it's going a lot higher. But I'm trading it now. I got stubborn with what I thought it was going to do, and of course, I made a 140 high, and I was long the shit out of it, and I was real happy because I had a lot of money, and then it went down to like where it's gone here, and it was an unpleasant ride, and I've traded around it, and I'm actually back up. Because of my trading back up to my high point after taking the pipe on a big chunk. But it is what it is. It's the life of trading. The life of trading. And if this would break down here just $1 or so, $2 would be great, but that would make my day. Make my day. Yeah, this is a game where you can make and lose a lot of money if you lever up. Let's see. The first hour is coming up here. We got on my hourly chart. This is a bearish engulfing candle. Obviously, you can see that 480 overnight. Remember, I set that level up there. I said it's got to trade above there. To be positive, it's got a couple up above here. The Nasdaq is. The Nasdaq, if you recall, too, I said that once it started, if it started trading and an hourly close below there, but it started trading below there, it would go for this settlement price, which it did. And now I think this is the target. This is that 50% retracement here. I'll show you for those of you who didn't watch me draw this candle this morning. Here's my 1440. That's 1440 minutes. And it's a 24-hour candle from midnight to midnight in New York, so it's East Coast time. And here's the body of yesterday's candle. I mean, we opened at midnight, and at midnight last night we closed up here. So it was a big candle. And I don't draw, I draw the midpoint of the candle, I don't use the tails. Now the NASDAQ is a wild beast, so it doesn't, the S&P charts really well. The NASDAQ always, makes bigger moves. So it gets kind of sloppy, but I would have this expectation that this would, maybe meet this. You can see like right here, here's this is the midpoint of this candle over here. And I left that there for a reason, but anyway, I was just looking at some other stuff. This was that candle the day, wrong thing. Let me change this to this. Change this, go here, 50% fib. I gotta just throw this on there real quick so you can see this. So you see this 50% is this purple level here. Actually, that should not come out, right? And you can see that, it almost tested it here. And this 50%, even though this was a small candle, I mean, it tested a lot of times, never closed below it. I mean, and it stayed good all the way out to here until it finally broke down. And then this was here. But anyway, this I'm looking for, and you can see this ended right there too. That's one of the reasons I left it on there. It just works as something significant, that price level there. So for any reason, let's see, I'm going to go here. Let me go here, back here, and look at this other stuff real quick, because this is not breaking down. Not breaking down yet, but I can do this. Looking at that, that looks like it's going to trade a little higher. And open. Damn, just when I was going to do that, it's breaking down again. Oh, there's the first hour. These are on the hour candles, but I keep a note of that. And let's see. Bam. $28. Damn. It's trying hard to rally. Trying hard to rally. Let's see. And I think it's going to rally a little bit, and then it will depend on whether it can get over this BGL. That stands for Big Green Line. A little story behind that, but that's what that is. 21 period simple moving average. Let's see. We're there. It should move up a little bit here. Even Intel could move up. 24. Wow. 27. There you go. 25. Ah. $24. Come on. here and do this again. Okay, duplicate. Looking at the S&P over here, it's right at the BGL. It's right at the bottom of the open range, and the Nasdaq's right at the bottom of the open range. They can recover that. It might be a little bit positive, but if they fail, this is where they're going to do it. If they fail, this is where they're going to do it. There you go. And it looks like they're going to fail. Let's see. Okay. So that's that. Oh, yes. Okay, Delphine, did you want to, Delphine, you still there? We can look at these statistics for the end of the month and see how I look at those. Yeah, okay. So here's what I have. Let's see, SPX, go here, go here, close that. And I'm going to close these other things down too. I can close my basic gap stats down. They filled those gaps. So you saw those. Let's see, save this, close this, close this. Let's see, this first. Let's see, save. And let's see, this is, what do we got here? Close that. SPX daily. I don't remember what I was looking at in here, but we'll look at all these other things here. SPX. So this is the SPX, and it's got all my stuff frozen when I'm doing this. There's ways I can make these programs run faster, and I've got to work on that. I run so much, that's why I like to try to close stuff down. The charts use a lot. This uses a lot. So anyway. Danny Riley. Oh, hang on one second. Danny's calling again. Okay, let's see. Now we're going to do this monthly study real quick here. Let me shut this window now. I have a lot of airplanes going by today. I'd like to um, keep the window open though when I can. And this seems frozen. Is my screen frozen here? I don't know how to work all this stuff here, the chat and all that. But anyway, let's do this. Let's see. I'm going to close that. And that will help. Let me close some of these other things down here. I'm going to close this. Close this. Close. That. And then I'm going to close. Oh, I have this. This is a big engine that I'm building. I have all the monthly summary data in here, all the yearly data. I have a heat map. And you know, my dashboard, I can show you a lot of, got all these daily stats in here. Anyway, this is going to be a great thing when I get it through. Let's see. So let's look at we're going to look at the last day of the month. And so this is what I do for the last day of the month. Here is first of all, let's just start out here. Let's run down here to the bottom. And you'll see these stats. So this is, oh, come on. I hate when I do that. What is this, 14? Go down here a little bit further. Right there. This is only updated up to 7/23, so I'll put in the last bunch of days of the month, but it doesn't matter that much because this is, so there's 11,743 days in here, but this is the stats on this because it's offset once. Anyway, so of all the days in here, 53% of the days are up days, 46% of the days are down days. So that is, and 11 are unchanged. This is in the SPX. So that gives you an idea. You know, obviously there's more up days than down days because the market does tend to go up, but that's what we're looking at. So then if we go down to here, now we can go out here to the, this is the, I'm looking at here, we're going to go down here to the last trade day of the month. That's right here. So I just put this in here, and this is all months. So there's, 560 months in here. So there's 560 last trading days in here. So now we'll go back here. So the last day of the month, this is calculating right now. Hold on, it's got to go through here and do this. It should be. Let's see. Did I click that right? I might not have clicked that right. Let's see. End of month. Month end close. Yeah, I got that there. Month end close. 560. Why isn't this? Oh, here's 560 here, but these aren't updating yet. And they should be. Let's see, do I have this formula turned off? Formula. Here it is. Now it's doing it. I guess I must have had that turned off. So this can give us the last day of every month. Let's see here. Get this going here. Open. Let me get this real quick. 1 second. Place. I'll just do that. There you go. You got those. Anyway, so now here we are. The last day of the month has been basically a 50-50 deal over 560 months. It's, about 51%, just slightly above. And now let's go here to the months, and we'll look at July. So now we're going to just look at the end of the month of July, and there should be 46 of them in here because this goes back to 1980. 46. So that's there, 46. Let me do this too. Let me go here. Find open. 20. So yeah, this it's showing 47, but let me go here to daily change now, and this is for July. The last day of the month has been 53. In the last, this has got a last day in because of the way this is set up, but it's not really in yet. Anyway, it's 53%. I'm to 46%. So it's been a slightly positive thing. And July is usually a really good month. Hold on, I'm looking at this trade here. Let me look at this real quick. Oh, you see we broke out above the BGL. That's always a positive thing. So they may be coming back unless they break back down here. The NAS can't do this right now. So this is, it's starting to look positive, but if this breaks back down here, it will definitely be a big negative. So we'll see. Let's see. Meanwhile, back at the range. Oh, okay. So anyway, let's go back. But there's something else we can look at, Delphine. Let's go back here and look at this. So this is the last day of the month, but then I look at the last day of the month. Sometimes I like to look and see, well, what if the last day of the month is on a different day? Like, so we can see here in July, and this is like most months, 20 times the last day of the month was on a Friday, and then, other times it's on other days of the week. Well, what happens if it's on a Friday? Does that change anything? So I go back here and look at this, and that's there. Preview. Place. We'll just do that. So now we go to daily change and see. So since that happened 20 times, when it's on a Friday, still kind of in the same ballpark. It's up 11, down 9, but that's small. Unless it's really skewed one way or the other, I don't look to see what's going on. And yesterday was a big up day, right? So let's look and see if the prior day was up, if that has an effect on it. So we can go here and see if that changes anything. It's still it should be. Let's see this. Make sure I get this automatic. That should change that. There we go. It's calculating down here. It's going to go through a lot of figures. There's things I can do to speed this up, and I really need to do that. But anyway, we'll have a different number here in a second. When the prior day was positive, that happened 14 times. Changes it slightly to being positive, but there are other things that I can look at too, like to see where we are in the year, like if we're up or down in the year. It makes everything makes a difference. So, but I just filter this stuff in here, and that new data engine that I'm building, well, I'll be able to like just put in all, like I can go, I'll wire all my codes together, and it will, I'll be able to like put in all those different parameters, like it's going to be pretty amazing, and I'm looking forward to it. But I still have a couple hundred hours of work to do on that program to get it to where I want it to be. Anyway, so that's that. Let's look at Monday, because that's the first day of August, and we will see right there what's going on here. So I'll clear all this out, and then we'll look at Monday, first day of August. Still with me, Delphine? Okay. So let me go back here and make sure I got everything set right. Let's see. I like to make sure I got my sort, oldest to newest, just clean that up, make sure nothing got changed. Probably didn't, but you never know. So you check that. And then we'll go first day of the month. So that's out here. And we will do right here, first trade day of the month. Since 1980. Yeah, so do I. So I've got these down. This is the first trade day of the month. And let's go here and just check this out. Make sure we got the numbers down here. It should be around 560. That's 552. Let's see, 552. Now let's go to daily change. And let's do this. It's recalculating this now. Oh, come on. Let's do this real quick. Do this automatic. I don't know why I'm having to do that today, but so and this will give us, then we'll look at July and see what August, first trade day of August has been doing. See 552, 320 up, 231 down, one unchanged. I might be missing a couple days in there, but anyway, that's the first trade day tends to be a little friendly. So let's go here and look at August. So we'll go here and do August. We have 46 August in here. August. And see what that's been in August. There we go, 46. Go daily change. So the first trade day of August, right now, it's been down 60% of the time. That's kind of bad. Let's look and see when it's on a Monday, if that makes a difference, and then we'll look at something else. Look at day a week. August has been on a Monday. Remember, if July's been on a Friday 20 times, August had to be on a Monday 20 times, the first trade day. So now we'll see what this is doing. So it looks, overall, it was like 60 some odd, over 60% of the days were down. See what happens if it's on a Monday. it changes it to 50-50 if it's on a Monday, 50-50. And let's look and see if today is a down day. If today, because currently currently we're still up. Let's just say if it's an up day. Let's go here. If today is an up day, does it have an effect on it? Let's see. Prior day up. Yeah, I keep working on this stuff. And when I get through with this new program, it's going to be so killer. And I'm working on a lot of these things. You know, I taught myself the program. I took some online classes, and I've been doing this so long. I can do some Python. I can certainly fix Python code, and now with AI, I can definitely fix Python code. But I'm working on this data engine and all my code. One of the things Excel is a really excellent program. It's because I started working with it. I mean, I guess if you were going to start to learn to code, probably you should learn Python, but Excel is also good. But what I do is this is structured referencing. All my programs, a few years ago, I went and, had the epiphany, my programming epiphany, that I needed to do structured referencing. Well, this structured referencing, the way you do it in Excel, I can dump this into Python. It translates to any other computer language very easily. And anyway, so that's what this is. If Friday ends up higher, it's only 11 days, and this is 7 and 4. It's a slightly more positive edge. So that's what I'm looking at there. But I think I did this study already. And let me go here and grab this, and we'll look at the second day. Go here. Documents. I mean, I have tons of programs that I've written in here. Anyways, let's go here and study first day of August, prior day down. Here's the first day of August when the prior day is down. First day of August when the prior day is down 70. So if today ends up being down, it's a 71% probability that Monday will be down if today ends up being down. So that's for August. Now let's go. This August 1st. Let's see. Second day of August. Here's the second day of August. I already did this, so just look at this. Second day of August. Look at that. Second day of August is bad. 71% of the time it's down. And I think this is when it was a Tuesday too. So second day of August, when it's a Tuesday, it's down 70. Now, when I see something like that, that tells me that there's definitely a negative bias to it. I mean, when you see something really strong, that is, this is the second day of August when the prior day was down. So if Monday's down, Tuesday's going to be down. That's just the way this is. That's a real high probability. So, and then I have others. I've done studies, and this is Fridays in July since 1980. This is all Fridays. Fridays in July since 1980. 190 of them. 59% of them were positive, 40% were negative. So, July is one of the best months. So, I like, I do studies when the date is, it's a certain date. Anyway, let's see. I don't have anything else there. So we don't need to look at any more of those studies, but that's what's going on there. I have a monthly study that I have to fix some of the data. I don't know how it got. Sometimes I move things, and I think what I did is I left my programs open. I don't know. It was like last weekend, and because I was working on, and we had a power outage in the middle of the night, and inevitably, when that happens, it causes problems. So anyway, that's all I have. Let's see.
Renee.
So hey, Danny.
Hey, Rick,
yeah.
Can you hear me?
Yeah, I absolutely can hear you. So you heard some of my studies there. We were just going over.
Oh shit. Hey, Rich. Yeah. Cool. You know, before you go, yeah, you've really cranked it today. Hold on 1 minute. You know, one of the things I haven't. You know, I called you about the bonds.
Right. And, I have my bond chart. Let's go look at these bonds. Let's see. Ichimoku. And I was looking at these. By the way, what is this? ES. This is not looking good right here. Ichimoku. This is if these break down again a little bit, I think this is going to give it up again. When we go down to, is that the low today? Oh my God. Let's look at the bonds. Bonds. You know, I've here's my bond chart. Let's go to the longer chart. Boo, that's not looking good. And so I think, yeah. We talked about the bonds a long time ago, and over a year ago, I said I thought the bonds would just be in the big trading range for a while. And here's I don't know why this is down here, but this was the level. What is this? This is back in 2023 when they made the low, and they went back up. And I thought we'd be, I mean, I don't know if we're going to go down there and test it, but we're certainly, this is the lowest they've been since then. So that's not good. You see that, Danny? Up. Anyway. Danny, I don't hear you. I don't know whether it's my computer screwing up here. I got a lot of stuff running. Do you hear me, Danny?
I don't know. I can't seem to. Rich, I can't see Rich's stream going right now.
Let me reboot this.
And I can't hear anything, so I'm not going to be able to add a real lot to this.
There, I just rebooted it, Danny. Do you hear me now? Danny? I rebooted my screen. Let's see, 2 shares. Let me stop this and start those again. Stop all. I'll go here. I'll do this. H, start screen share, screen share. Okay, Danny, can you hear me now? Can you hear me? I don't think you can hear me. Danny? Danny, I'm going to reboot this whole thing. Oh, you can hear me? Oh, thank you, Easy Money. You can hear me and you can see me and you can see my chart, right? Okay, so I think it's Danny.
You can hear me?
I can hear you. And Easy Renee and Easy Money said they can see my chart and hear me and see me. My messy bedhead. Anyway, can you hear me, Danny? You can't hear me. You have to reboot, Danny. I think if you reboot. Anyway, let's look at this on if I can get this up on a monthly chart. Monthly. Let's go to monthly. Be easier to look at. And then I can spread this out a little bit. So here's the monthly chart, and this is what I was talking about. I mean, we're down here. This, if
I can't hear you guys.
It's Danny, I can hear you. It's you got to reboot. Easy Money, can you still hear me? And Renee, Delphine, okay. So it must be Danny's and I don't know why, but this here on this monthly bond chart here, you can see the trend has definitely been down, and this is a big thick cloud, so it's going to take a lot to get back to here on this monthly. I mean, this is really significant, but if it takes out this low, it's just
okay.
not good.
All right, but
anyway, everybody else can hear me, Danny. I'm all green, I guess. Anyway, that's what I'm looking at there in the bonds, and I thought we'd just be in between this range and here for a long time. Now, not to say that we won't bounce off this bottom down here, but it's certainly not looking good. Let's go back and look at the weekly chart. W enter. Even this weekly, really not looking good. But the weekly, I mean, it's been trading sideways for a long time, and this is another thing that I just thought we'd stay in this range as long as we don't take this out. I mean, we could bounce back up and turn back up, but that really needs to hold. But it certainly looks like we're going down there to test that. And then maybe bounce back up. I mean, we haven't taken that range out, but I have always said that the only way the government's going to pay back the debt is they're going to inflate it away. They can't tax it away. They can't raise taxes enough, and they aren't going to cut spending, so they're just going to inflate it away. And so rates may go to some level and stay, but they'll just be inflation. And then we already know there's a lot of inflation, a lot more than what's going on. And that's why the stock market is, publicly traded companies are, they're able to hold their own against inflation. That's why it's better to be in the stock than obviously be in the in cash or in bonds. I mean, but that's just horrible because inflation eats away at the principal no matter what rate they give you. Unless you can't get a rate high enough to cover inflation anymore or ever really. So anyway, that's clicking there. And I want to go back here and look at one other thing real quick. I want to look at Intel because I have some of these. I bought some of these Intel puts. Here's the weekly. This looks like they're going to hold in here on this weekly, but let's go down to these other time frames. There's my 1440. See what that's looking like. This is kind of negative, although we had a big up day yesterday. If they did a 50% retracement on this, go here. That would put them back down at 87.
Yeah.
And I think that that's totally, that they could easily test that 87 today. I don't know that they're going to, but it's not out of the cards. Let's go look at this. Yet. Yeah, this is it's the 480. It was very positive a couple days ago. Let's go back down here to the 60 and see what they're doing on that. Roll. They're about to break this. It was looking pretty good, but it's looking more negative now. Let's go to 5 minutes, see what that BGL is. This is the BGL. They're trading under the BGL. They just touched that. If this could easily accelerate down to this point, at least down to this 91. I think that's going to happen today. So that's what I'm looking at there. Yeah.
Hey, Rich, can you hear me?
I can hear you now, Danny.
Okay. Yeah, I don't know if you can see me or, but
I can see you. I just went over all the bond stuff.
All right. Yeah. I kind of wanted to touch on a little bit about kind of the option stuff. You've kind of moved around a little bit recently, and I know you've done really well. Is it that you feel it's a better way to go than trying to trade around the stock position? Are you still holding Intel?
Actually, hold on one second. I'm going to do something here, but I just missed that trade. 100. I actually this morning, I want to hold a core position, and I really am a firm believer that Intel is going to do really well over the longer term here. Hold on one second. Let's see if I can do this. Oh no, I'm going to miss that. Preview. Place. I really think Intel is going to do well over the longer term, but okay, I got those. Right now, it's I have to be realistic. It's having a hard time, and as all these tech stocks are, they all ran up so much. I mean, T-Bond is a good guy to listen to because he analyzes everything. I mean, he's an incredible analyst. He really is. Yeah. I'm lucky to have him as a friend, and and as somebody
and mentor.
And a mentor. I mean, he is just brilliant. But anyway, I just think that longer term it's definitely going up. All these stocks are going up. It's just a matter of where we are in the cycle of things, and
yeah.
I think one thing that's really hurting the market almost more than anything right now is the war. I mean, it's an open-ended, festering
uncertainty.
And it could escalate. Bad things could happen. It's inflationary. It puts the whole world at risk of things happening, and when you have that kind of uncertainty, it's really difficult. It's really difficult.
Yeah, the other part, I think that's, I've been on you for a long time. I mean, since you did that bond thing about over a year ago. And I did work in the bond pit. And I remember when the bonds were 168, 170.
Oh, right.
Yeah. And, but be that as it may, I think, when you did that about a year ago, a little bit over a year ago, I really started to hyper focus on the bonds. I don't talk about them every day, but I do look at them every night. And when we started going down in October of last year, that's kind of when the bonds started moving, when they're starting to talk about the AI bubble. And then we had this big rally and the bonds recovered. I think they went up back up to like 114, 115. I'm not sure. I don't have it in front of me. But one of the things I really have been looking at and watching, and maybe it does have a lot to do with the war, but primarily the war has brought on higher inflation, right?
Right.
Oil prices and that, it all big funnel down. And what was going on and what I was kind of watching is that there was like a lot of liquidation on the long end, like the 30-year and the 10-year. People have been getting out of those longer dated interest rates, and they've been going into the shorter dated. And in particular, I think that a lot of people are pretty focused on the 2-year. And I'm not giving away any information. I've been talking to Marty about this for quite a while. I think there's a lot of people out there that are struggling to make money in these markets right now. And I think there's been a lot of liquidation going on. I mean, long-term liquidation, people getting out of these big AI names. And even if they do come up with a lot of money to refund these Citadel buying that hedge fund, and people, I don't know how many different headlines there were yesterday about new money going into these AI companies and stuff. It was really big. I wrote about it in the opening print. But I think that, if you're concerned about your portfolio and you're looking at your stocks, and there's really no reason not to lock in. I'm not sure what the 2 years, what does the 2-year note pay right now?
For something?
Yeah, it is. I think it's over 4%. So, and I've been telling that to Marty for months. He goes back and forth between trying to trade himself, which it's harder and harder for him to do now. And I'm not afraid to say this. On Wednesday when the market sold off late in the day, he very rarely does this, but he says, well, I'm a momentum guy. Well, you know what? I don't think momentum trading works that well anymore. I mean, they're momentum down and down and down, and then you have an 1,100-point rally in one day in the Nasdaq. And he got short on Wednesday. Like toward the lows of the day, and I don't believe that works. You can't. If it was that easy, like when we were on the floor, there was less program and electronic trading. And the market looked bad. They rallied. They sold off on a Friday, and hey, you know what? You could get short. And the market would open up lower on Monday, but or for any other day, but in particular Fridays, I think. But the thing is that I think the whole complex itself has changed so much, and you can kind of see it, and more focused on the Nasdaq and tech stocks than anything else, right? Because of this big overinvestment. But
well, actually, I looked at, the zero-dated options. They're having a big impact on the market.
Oh, huge.
They're trading twice as much as they did a year ago. Wednesday, I had my best day ever. I'm not going to say how much it was, but it was a lot.
It was a lot.
I got long. I got long after long puts after the Fed meeting, and I added on. And when it went, I rode them a long way, but left a lot on the table. So let's see. Oh, but I was gonna show you this. Let's see. I have this program almost. Let's see. Go here to personal compliance documents. I think it's in here. Come on, open market cap analyzer, and it is the I think I'm working on 3.2. There's a few things I have to change about this program, but anyway, what I'm doing here is, let's see, last modified Tuesday at 6:38. You can see if this dashboard's right. Anyway, so here's the outcome of this program. It's going to do a lot of other stuff. But
Is that the stock program?
well, this just analyzes and tells what, based on the closing prices, what the market cap is of each company, what the rank is, who's the biggest. Here's Apple, and this week obviously all this is going to change because Apple went down a lot the other day. But it ranks all the companies, and then on the index stats page, here's the top 6 S&Ps. This is as of last week, I think, and I'm going to update this. I'm going to start updating this on a regular basis then. And I thought I could add, I'm going to add other stuff to it. But top 10 in the S&P, top 10 in the 610, and here's the percentage of the index. The top 6 stocks are 51% of the NASDAQ. They're 30% of the S&P top 10. And then I'm also I have another program that tells how much each share moves each index price.
Wow.
And I have that program. So then I'm going to have it all added together. And then what I think I'm going to do is I may open it up, and then it's, I am on my website, and then you can enter whatever stock you want to in the S&P 500, and it'll automatically kick out, the what percentage of the index it is, what the market cap is of the company, what the rank is, how much it impacts the S&P, how much it impacts the NASDAQ. And so it just have all that information right there, because, and I have a program that it's really useful after the close when earnings come out. It's my I haven't updated this in a while. Let's see, market cap analyzer. Let's see if I have it in here. I have it someplace. Anyway, I run it. Let's see, active. Nope. I got to remember where I kept it. I have so many programs. I can't keep track of everything I do. I really can't. It's almost bad.
That's all right. Now, what about the widget that you were going to build with the?
Well, that's one of them.
Yeah.
I have like Danny. I have so many things. I can't keep track of everything I have. But I have a plan now. I'm very focused on like this first market cap program is I'm really basically done with it. I just have to look at it a little bit and decide what there's a lot of things I can do with it. Let's see. I have this event days, but once I get this done. Let me see if I have that other program. That was once I get that done, it's this program, as I say. Oh, there's a lot of sites here. Here, points per underlying version 2. That's 725. 6. What is this? See if I have this active. Nope. This is all the stuff that goes into building those programs. I mean, this is just one of those, but I actually have one of them that is working. I'll have to find it. But it tells you, it can tell you how much the market is up or down based on one stock. And at night, it makes a big difference because, let's see if I can search this. Point basic gap stats full portal E bond copy. Where the hell is that? Points per underlying. And that is, maybe it's here. No. I have it. I'll have to find it later.
That's all right. That's all right.
It's anyway. I'm working on all this stuff, and it's all. But here's the main. This is the really main program that I'm working on. This study engine. This by the time when I get through with this, I think it's going to have like 50 million bits of data in it.
Holy God.
Literally.
Let me ask you before you jump forward. I want to, you manually coded when I first started. When we started talking like 3-4 years ago, you were manually coding, and you had manually coded probably 15,000 hours on your own.
I think since I started coding, and I don't know, was it 6? It's been 6 or 7 years now. I think I've coded at least 15,000 hours.
Yeah.
I mean, and I still code what I want, and what with this engine, AI is saying that I can take my code and dump it into the AI, and it will work on my model with my code, and it can speed things up, and actually Excel has what they call a data model that you can add and connect a lot of data. Because of the way I do structured referencing, and all my tables are referenced, and I use VBA to open and close programs. You can link all these databases together, and I've started working with dynamic arrays, and that's when you put inputs in, and it changes the whole database. It just contracts it or expands it according to the parameters you're putting in, and it's kind of funky. I mean, I'm going to be doing some of that stuff with AI to make my programs work faster, but also it says I can put in as many factors as I want to, where I used to, I just have to add another line of code, and then I got to go, connect one piece and then another piece, just like when I was showing people the days, up days or down day probability based on historical data, and if I look to see if the prior day was up or down, and what impact that has in it, I have to go click a different column, and so by the time I get through, I've clicked 5 or 6 different columns. Well, this new data engine assumes that I can just go one place and put in the things, put in whatever I'm looking at, and it'll figure it out. AI is definitely getting better, but I'm telling you, I've wasted a lot of time with AI taking me down, rabbit holes where it says, oh, you can do this, oh, you can do that, and it doesn't always do things right. Like when I was doing that points per underlying, it tried to tell me there was a different way to do it. I said, and I told AI, you're doing this wrong. This is the formula. This is what it is. It says, oh, you're right.
Right.
So
you're teaching it.
You're teaching it. So the point is that earlier this year, the economy went a little sour, I think, because everybody was afraid they were all going to be replaced by AI. AI is just a tool. It's going to make everybody more productive at some point in time, and maybe it will get better, but it's not going to replace everybody's job. I mean,
here before you move on with that, but it has improved your overall structure. It's done a lot to have it.
Because here's I use it when I code something and I code it. I'll go in and I'll say, is there a better way to code this? Is there something I'm not doing, or I'm missing something, and then it'll change the code and give me, sometimes it's better. Sometimes it says, well, you can leave it the way you have it, or you can do it this way. I mean, sometimes it makes good suggestions, sometimes it makes poor suggestions. And sometimes it's totally wrong, as I say. You just got to kind of watch what's going on.
Yeah.
But I'm, but it definitely, when I'm telling it what to do, it definitely makes me more productive.
Right.
It makes my code better and less likely, to have errors in it, or something that's, gonna be wrong. But the one thing about programming, and anybody can program, anybody can take data and program against statistics. It's like, what questions are you asking? And that's where I think my my experience is because I've been doing this for 40 years. I mean, I think I ask the right questions most of the time. And I mean, I'm working on my databases, and even when somebody asks me a question, I pretty much, my databases are structured as such that I can pretty much answer anybody's question, given, sometimes it might take me a day to do it, but I can program it in. And, and I look at, as I say, I look at a lot of things in the stock markets. I have the political cycles in coded in a lot of places. I have the VIX coded in a lot of places. Just a number of different things. And I mean, there's a lot of ways to look at things. And then I have my own theory about market pricing and market timing. And, those things are unique to me. And just like this right here, we can look at this is this was a big, this was a 1440, and I think in some of these bars sometimes, because I know they're significant. Well, this 1440 here, let me go get this on 480. This was hit months ago. This 1440 came off of this bar right here. That was back on 5 in May. And I made this bar thick then because I knew it was important. I'll see how these 3 bars are thick and these bars down here are thick. When something happens, I pretty much, I have an idea, and you can see it's come down here and tested this on on these days. And I look at these spikes as just tests. It's where it closes that's important, and it's never closed below that, even though it's tested it, tested it here for a few days, tested it here, and then we've come down and tested here again. So that's a significant thing. And you can see right here, like here was yesterday's midpoint of this bar. We went down and tested that. And I said that this morning. I said, I in the room, I said that it probably would go to 50. And if they were going to test this, they could go down here and test this bar. And, of course, that's what they did. Now we've rejected it. We're going up higher, but there's still other things that are not looking good right here, right now. But that's and as I say, this 1440, that's based on my 1440 minutes in a day. It's my time fractal theory on market pricing, and I only use the body of the candle. If you use the wicks, it would be totally different. I mean, obviously, if you use the wicks, the midpoint of this bar would be down here. It wouldn't be up here. But for me, that is up here. But people that do midpoints of ranges, you can't do, because these tails, they represent total rejection. In this case, the buyers completely rejected what the sellers tried to do, and here the sellers rejected what the buyers tried to do. They pushed it around here, and this is kind of where they met for the good period of time. But anyway, yeah. So I have these theories about things. Like here was my overnight 480. We never could get over this, and we went down. This was the 480s from yesterday, and I have this 480 overnight theory and prices, and I actually have a big probability table about how this works. So it's even more precise. But like yesterday, this was the 480 overnight. These are the gold levels. Once it got above here, it just took off. There was overnight there. We opened, tried to get up, tried to open right up there, and it failed. So it's got to get over this. I don't know that that's going to happen today. I'm still looking for a little lower right now. And let's go look at the 60. Actually, what time is it? It's almost noon. At noon, yeah, this is looking a little weak. At noon, I'm going to go here and I start looking at these. I look at the 240 candle, and depending upon what goes on here, if we close a little lower, I'm going to have a resistance point in that I'll determine off of this candle here. There is I'll actually take a look at this candle. This was the noon to 4 o'clock candle yesterday. Because these are 4-hour candles, 240 minutes, 4-hour candles. So this yesterday was, and I color code these. I'm going to leave this in at purple right now, but right there, after afternoon, and once it got above this high, it just kept on going. But today, as long as we don't close below this, if we close below this, it would be, even this hour, be very bearish, and then but we'll also be able to draw a point up here where it should hold it down if it's rejecting that price. Let's look at the 120 real quick. I look at all these, 120. Here's the 120 from this morning, and this 120 this morning, the resistance point here is this was the 8 to 10 o'clock candle. And it was a down candle, and you can see that when this thing, even after that, went back up, it couldn't make it to the 50% mark of this candle right here. So I'm looking. We have what is it? We have 17 minutes for this candle to develop here. So it's either going to be more red, or it's I think it probably will end up being a little more red.
Yeah, I think so too.
That's the way. Although this was a good rejection down here. Last hour they went down here, they broke down here and came back really well. But it's
a lot of risk off over the weekend.
Yeah, I think, and that comes back to that war stuff.
Yeah,
people can't.
I don't know. I don't know enough about it, but Pitbull thinks that he'll put U.S. troops on the ground, and he was talking about this weekend. I don't know. That doesn't sound like a good idea.
No, it sounds like a horrible idea.
Yeah. But Rich, before we go, we talk about your levels quite a bit, and trying to get people to look at them and take them as part of your service. Would you be willing to maybe, we've got you never know really who's on, how many people are on, but if you look at Twitter right now, it looks like, there's probably 1,100, close to 1,100 people that viewed you. Would you be willing to do a week's worth of putting up your levels so people could look at them and then maybe shut it off at the end of the week and put it as a link up for people to pay for them?
Sure. I can do that. And in fact, I put them in the room this morning. I don't know if you can put these out on Twitter.
Can you put them in like a link or a file? Because they really are. I mean, for the people in the room that have not used them, or in the pit room or in any of the rooms, I mean, there's quite a few people between all these rooms. I mean, Marlon says about 500.
Okay, yeah, here's an example. Here was my numbers this morning. This morning on the opening, we ran up there. This is the NASDAQ. Remember, I said the NASDAQ's always sloppy. Here's my one standard deviation in the NASDAQ. They went up there. They closed right under this one standard deviation, although they went there, then they rejected it and they fell. I mean, that's how those work. And now
Yeah.
it hasn't tested this downside yet, but that potentially could happen. But I mean, that's just like kind of a regular thing. Here's the S&Ps. The S&Ps, when they fell down here, of course they didn't go as high, but when they fell, where did they stop? 1 SD. This is my 1 SD lower today. They came down here and they went back up. And because of my sheets, I explained to everybody that a breakout, especially here, this is a high probability trade to the downside, because the first 5 minutes of my opening range, which is 25 minutes, established the high. And that was the same high in the first 5 minutes and the first 25 minutes. When that happens and you break down, it gives you a real high probability of range expansion down. So,
well, Rich, how would people get a hold of you? Would you want them to email you? People in the rooms? Easy Money, the Delphine, these guys, would they like to maybe look at this? Other guys like on Twitter, how could we deliver them for a week or so that they could get them? Should they email you? Or
I can put up something on my site,
or you could put a link in your room or in the
do you have a link that you could use?
I'm not real good at making links, but maybe Renee could help you. I mean, Renee's in here right now, or Marilyn.
I could do this. Here's what I'm up against right now. I told you, we're downsizing. So
no, I know you are. You sold your home.
We sold our house.
Congratulations. And I sold my other house too. I told you it takes a little longer to sell these homes.
Yeah. So, well, I mean, because interest rates are higher, the war's been going on, it's uncertainty, and this is, I mean, everybody can't afford. I mean, it's not the highest price home in the world, but it's not the lowest price either. So
it's a very beautiful home.
Oh, it's a really, 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 I've lived here for 21 years, and we're looking forward. We're going to look. We looked at a few townhouses. We're looking at a few more. We just want to rent for a little while and figure out where we want to live, what we want to do. But we don't even use half this house, and it's it would be nice to be a little smaller, although my wife keeps threatening me that we're going to have to get rid of everything. So,
I can't speak for everybody. I can only talk about myself. I've never been a guy that wants a huge house. If you're not using all the rooms, you know what I mean? If you got 5-6 bedrooms and it's just you and your wife, and I get it. You have guests come over and your kids and stuff like that stay. But,
but it's a 5-bedroom house. We don't need.
Right. And then Marlon sold his house recently, and he's going through the same thing that you're going through. Although he's already moved out.
Yeah.
What are you gonna? We've talked about this. You're gonna go rent for a little bit before you just go out and buy something, right?
Yeah.
I think that's a great idea. That's a great idea.
That's the plan. I mean, we've got a lot of stuff to look at, a lot of decisions to make, but this next month is going to be very busy. I'm not looking forward to it. In fact, I hopefully have a couple appointments made to go look at stuff after the close today. And we're not even sure where we want to live. I mean, whether we want to live in the city, or there's a couple of areas like right next to Denver that we want to live in. We want to be a little closer to our daughter. We're like 45 minutes now, 45 minutes. If we cut that in half, it would be a lot better, or less. But then there's.
But you're moving closer to Denver, right?
Oh, for sure.
Yeah,
for sure.
I mean, the thing about me, when I moved out of Chicago, I didn't want to be around a lot of big. I didn't want to move into a big city. I wanted to get away from it.
Denver's compared to Chicago, Denver's small.
Yeah, well, I know, I get that, but I also wanted to be kind of in close proximity to, like, I'm not saying nightlife. Maybe I did that a little bit, but where you can quickly get to like an area where there's restaurants and walk around, and that I think that's really big.
Well, yeah, we're looking at one place that's like it would be. It's a town called Arvada, and they have it's got an old town that's, I don't know, 3 or 4 or 5 square blocks or something like that.
Yeah,
That's got
yeah.
like
Oh, that's
bars
cool.
and restaurants, and it's not downtown Denver. It's
That's
on
all
the
right.
west side, so it's closer to the mountains because I hike and ski. And,
Yeah, yeah.
and I that would be kind of good. But so we're gonna go look at a couple more places around there, and we looked at an area last night that was kind of interesting, but you never know. It was in Denver, and they haven't gotten back to us yet. We tried to make an appointment, and my wife may have it scheduled already. I haven't talked to her yet this morning. It's in like there's an art district downtown in Denver. I don't know, it's 4 or 5 blocks long with restaurants and art galleries and stuff like that.
That's great.
It would be kind of a funky place to live.
Downtown Denver is funky. That's
the only problem.
Got a lot of hippies walking around.
Yeah, the only problem with that place is, and then my wife says that it's like you go down this real narrow alley kind of way, and you got to turn 90 degrees to get in the garage. She goes, "I know I'll hit your car if I have to park in there. I can't do that."
Yeah.
So,
Well, I listen. I know it's going on 12, and I want to thank you for coming in today, Rich. I think you're a really solid guy. I appreciate you being my friend. We've gone through a lot, both on the trading floors and watching you develop your product. And I think you're getting to a point now, and I think you'll agree that, probably the next step is, coding to an automated system and bringing it out. And,
Amy, that's my wife, says, when we move, you should retire. And I'm going like, I'm never going to retire. But,
yeah, you and Pitbull.
But I will devote more time to finishing up this coding stuff. I mean, it's taken me a long time because every 5 or 6 months I have an epiphany about what I need to do and how I'm doing things and making improvements, and it's just something that is forever changing. But I'm working on the final touches of several programs, like that market cap program. I know it's a simple program, and then the other, but there'll be programs that I can like sell this as a business to somebody, hopefully. And
no, I think you will. I think you can.
But the data engine is the big deal. And I have a lot of rules, really strict rules on what kind of data I look at and what kind of data I exclude, and it makes a difference because the other thing is that I was explaining to people in the room that I use this 4:15 settlement price instead of a 4 o'clock settlement price, and why I do that. And there's a lot of little anomalies in data that people don't know about. They don't know about opening and closing times that have changed over the years. There's certain kinds of data that have changed over the years, and everybody goes and downloads something and they think it's like, oh, this is all apples and apples. It's not all apples and apples. There's a lot of differences in the data. So some of the things that were true 20 years ago changed 10 years ago, or there's something,
or a year ago.
or a year ago. And so you have to have rules on your data collection and how you clean it up and what's going on. And I do certain things with my data, to kind of ensure that it's clean and it's mine. And I have over the years I've spent since I've been programming, I don't know, hundreds of thousands of dollars on data. I mean, I have a big data package that, and at different times I've spent a lot of money to, like get data, and it's expensive.
Yeah.
So there's a lot into what I have, but I've done it the way I've done it, and there'll be things to add and do. But anyway, and I'm excited about it, and it's enabled me to do some things. And I'm very excited about a couple of the programs that I've worked on and off on, and if they come to fruition, like like they did this morning, I saw this break coming because of what I was doing, and I bought a bunch of puts, and I got out once again. I got out too early.
That's all
I
right.
bought puts for $1 and sold them for up to I think 470.
And where'd they go after that?
$10.
Oh, fuck. Sell half and hold half.
Well, I sold them from 350 to 470, and I was happy.
Yeah,
Danny, I had a lot of them on.
I know, and I know you're not going to talk about that. You should. But anyways, listen. I before we go off, I want to let everybody know that Market Profile Tom is back, and he's going to be taking Thursdays. We're getting kind of back to a better schedule, and thanks for Rich, because I think Rich is one of the, we have some great guys, but when it comes to analytics and what he's doing, we don't have anybody like that. And to tell you the truth, Rich, I get a lot of emails from people all the time, and I think you're one of the best. You don't go on Twitter a lot, or you don't post a lot, but I think that there's a lot of people out there that have never connected with you that I would think would be a good idea if they like this kind of data collection stuff like you're doing. I think it's great. I do. I think it's unbelievable. And and then also one other thing real quick. On Tuesday, I think Niels' father passed away unexpectedly. Yeah. And I think it was last Tuesday. And he's going to be coming back, and we're going to be demoing his platform, which I believe has gotten very, very good. I mean, I use it. I use it every day, and he has made, again, I think he's been using AI to make a lot of great improvements. And there's a lot of other people in the room that are using it now. But I want to thank everybody for coming in. Rich, let's try to figure out the level stuff, whether it be we can link it into Twitter, or we can put a link in here, and do a free trial for a week and see what we can drag out for you. You do sell products, right? I mean, and
I do. I do. I need to work on my website a little bit. Danny, I have so much to do, and I've been trading so much that
I know you have.
Everything's taking a back seat. I mean,
and your wife wants to handcuff you for a little while now.
Well,
right?
She's just in here telling me we have places to go.
Right. All right. Well, listen. Thanks for coming in, Rich. You're a great guy. I want to thank everybody for coming in. Happy Friday, and remember, I don't know if there's going to be a little risk off going into the close here, but it sure seems that way. So,
Danny, I'm thinking it's not a good close.
Yeah, I got a feeling too.
That's what I'm looking at.
Go ahead.
I was just going to say we were just talking about. I was just talking about that last hour, the hourly candle. Actually, this candle's turning a little positive here, but it's.
Well, you've got a couple different things going on here. You got the end of the month where the S&P, we talked about, June and July being down. Yesterday, I think the S&P was only down about 1.5%, 1.7% on the month.
Actually, I think I had this in here.
And I think you're going to have some rebalancing at the end of the day. You've got the risk off stuff, and then you've got the week 4 options expiration. There was 5 weeks in July, but because of the 4th of July holiday, they did that one options expiration at the beginning of the month on Thursday. So we've only had 4 week 4 Friday option expirations. And with all this stuff going on, I would imagine that you're going to see some big moves late in the day.
Yeah. This was, I had these stats from a couple days ago. I could update this. I'll update this and put this chart out this weekend.
All right.
And I'll put this on Twitter, and it'll have the all-time high and, 20, the
And then hold
current
on.
month.
Let me-
But I'll put this
let
out.
Well, you can you type your email in for people that are in here right now if they want to get a hold of you? Put your email in there, because maybe some of these, Rich has got a lot of really great products, and because Rich has been hyper focused on his trading, he's not been pushing out his stuff, and that's part of what we want to do for Rich. Comes in here and he's not asking for anybody for anything, but if you're interested in talking to Rich, or you're interested in taking some of his product, get a hold of him. And if we can get
Hey, Danny, I just put it in the room. Can you put it on
Twitter?
Twitter?
I see that. Yeah, I see that. I can put it on Twitter.
Yeah. Anyway, as I say, I'm gonna be real busy over the next month.
Right. That's all right. We got it. You're moving.
Yeah.
So my Anthropic, my post yesterday I did about situational awareness, what was going on Wednesday when they were liquidating. I've got the most hits I've ever got. It's got 107,000 hits on it.
Wow.
Yeah.
That's a lot.
So anyways, listen, Rich, thanks a lot for coming in. I know you probably got to grab lunch, and
yeah, I got
please tell Amy I said congratulations.
I will.
Yeah,
and by the way, Danny knows my wife, because my wife used to work on the trade. My wife worked on the trading floor for 25 years too. So
yeah,
we were both down there. That's where we met, and then we moved.
She's a nice lady. She's a nice lady, but she's a tough cookie.
Oh man, is she a tough cookie? Okay,
all right.
Danny.
Well, all right, you guys take care.
Okay, bud. Thanks. We'll talk
later.
Hey, everybody in the room. I'm going to hang this up now here too in the room.
Okay.
So I will talk to everybody a little later.